subscribe to our YouTube channel, Joy Learning TV.
Hello viewers, welcome to Joy Learning channel. I'm taking you financial accounting. My name is Adade Gottlieb, or simple, you may call me GK. I'm taking a topic in a financial accounting, which is the basis of all topic. So I entreat all of you to listen and to follow this lesson. Once this topic is understood, then it means almost every topic in accounting or financial accounting will be very easy for you. So our topic for the day is financial statement of a sole proprietorship. By the end of this lesson, the student should be able to, or you should be able to define financial statement. What is a financial statement? State the component of financial statement. Then explain a sole proprietorship. State and explain the format that we use to prepare the statement. You should be able to state them. Then that of the balance sheet. Then you should be able to prepare the income statement and then the balance sheet. Now, what is a financial statement? When we talk of a financial statement, there are formal records that we prepare, or they are formal record of the financial activities of a business, a person, or entity. So, any formal records that we prepare, they are all formal records we prepare of all our financial activities of a business, a person, or an entity. Or better way, all relevant financial information prepared in a structured manner and in a form easy to understand. So that is a financial statement. What we are talking about here, you prepare, is a lay down format or activities that we prepare. So when we are talking of a financial statement, is presented in a structured manner. So which means you cannot deviate on that. Then what are the components of financial statement? I think you may have heard some of them. We talk of statement of financial position, which is commonly known as balance sheet. Then income statement, cash flow statement, note and explanation of the financial statement. So these are the examples or components of a financial statement. Now, at your level, the only thing we're going to talk about here will be the income statement. So you take it. Over here, our focus is on income statement, but you are also supposed to know the component of financial statement. Now, what do we mean by a sole proprietorship? Sole proprietorship. Sole means what? One. So it's a type of enterprise owned and run by one person, in which there is no legal distinction between the owner and the business. So all we are saying here is that you establish your own business and you manage your business yourself. So there's no difference between you and your business. So such businesses, we call them sole proprietorship. So basically, we're going to look at how to prepare an account for these enterprises or organizations. So means what? One. You set up your own business and you run it yourself. So you are not different from the business. Now, what are the examples of sole proprietorship? So I hope we can guess many of them. Local clothes store, artists, and what have you. Or provision sellers. When you go to the market, you could see. So you can mention a lot of that. Now, let's look at some of the or examples of images of a sole proprietorship. So we can see a man there. This picture is just to enhance the understanding of the lesson. So the source is not mainly known, just to enhance the understanding of the topic as we treat. So you can see a man in his own shop, then selling, and somebody is buying. Then the next one to the same thing. You can see a man in his shop. Now, let's come to our income statement now. When we talk of income statement, what are we talking about? So basically, you have two main things over there. That is trading account and profit and loss account. Trading account and profit and loss account. Okay. Now, but what we should know is that trading account is different from profit and loss account, but mainly we combine the two together. So the question will tell you that prepare trading profit and loss account for the year ended. But what I just want you to know is that these are separate accounts, but mainly we combine these two. Now, when we talk of trading activities, mainly this is where we talk of the main things we have. There is sales and purchases. Okay, so these are the main things we have: sales, purchases. Now, this is where we talk about gross profit or loss. So this is where we're going to determine a gross profit or a gross loss. So for your objective, they can say trading ends at where? So what we should know is that trading ends at either a gross profit or a gross loss. So again, the main thing, sales and purchases. Then when we take the profit and loss, if we take the profit and loss, then we are talking of revenue and expenses. So over here, the two main things over the revenue and expenses. So once we are in the profit and loss account, you talk of revenue, you talk of what? Expenses. So these are the things. So trading, sales and purchases, profit and loss, then revenue and expense. So over here, you declare a net profit or loss. So profit and loss ends at net profit or net loss. So that is the income statement. Income statement. So trading account, profit and loss account. But the question will just give you prepare trading profit and loss account for the year ended. The year will be given to you. Then you take it like that. Okay. Now, what are the formats that we can follow to prepare these accounts? So over here, we are combining the two together, trading profit and loss account for the year ended. The year ended will be given to you by the question. So as we mentioned earlier, we said the main things here are sales and purchases. So let's look at it. Sales. Sales. So we have three columns that we are observing. We have two formats, vertical and horizontal. Vertical and horizontal. But we are using the vertical. The vertical is now the modern one. So I entreat all of you to learn the modern one. So the sales is the first thing. Then let's return inwards. In the first place, what is return inwards? Return inwards is you sell to people, and one reason or the other, they are bringing the goods back to you. So what is the actual sales you have made during the day? So you sell to people, one reason or the other. So they have brought the goods back to you. So if you want to know the actual sales for the period, it means you have to less the one they have brought from the one you have sold to them. So that is why we have less return what? Inwards. So inwards, the goods are coming to the business. So that is why we say inwards. The goods are coming to the business. So you less it, then when you less it, the actual sales now become net sales. Becomes your net sales. So I don't think it's difficult. So we know our sales. Then you less your return inwards. You get your net worth sales. So you have to watch the question once these things are in the question. So let's assume we don't have return inwards. Then straight away you bring your sales. Then you don't have to repeat the sales figure again. Once there is no return inwards, there's no net sales. So there's no need for you to repeat the figure twice. No. When there's no return inwards, there's no net sales. Then you move on. Less cost of sales. What do we mean by this? So, you know, you want to do a business. You don't just stand and begin to sell. You have to make a certain expenses to make the product ready for sales. So all these costs that you incur to make the product ready is what we are calling cost of sales. So you now compare this to the actual sales you have made to determine whether you are making a profit or you are making a loss. So the first thing we talk about is the opening word, stock. What is a stock? So stock, that is the goods or anything the business trade in is a stock. So if you are selling chairs, that becomes your stock. If you are selling provision, that becomes your stock. If you are selling cars, that becomes your stock. So we have to get it well. So we have opening stock. So which means if you are talking of opening stock, it means the business has been in existence. Because we know a fresh business will not have opening stock. Because what we should know is that the closing stock for last year become opening stock for this year. So we should get, so it's not all questions that will give you this. This one is just a format. So it's not all the things that you find in it. So then we add our purchases. So let's assume last year your closing stock is 30. Then you bring it to this year. That 30 may not be enough for you. So what do? You purchase and add to this. So that is why we say add what? Purchases. So we have columns we have to observe. The opening stock should be in the second column. Then your purchases. Once you have adjustment on purchases, then you should put it in the first column. Do all those adjustments on it. Then carriage inwards. What is the carriage inwards? So the amount you spent on bringing the goods to the business. That is the carriage what? Inwards. So you agree with me that you have to add it. A business-minded person, you purchase something, then you charter a car to bring it to your premises, automatically you should add that cost to the price of the goods you have bought. So we add what? Carriage inwards. If you don't do it like that, then you run into a loss. Then you add your carriage inwards, then you less return outwards. What do we mean by return outwards? That is, you purchase some of the goods, one reason or the other, you don't like some of the goods, or there are defects. So you have to return the goods back to the supplier. So, or the creditor. So you have to less it and know the amount you have to pay. So we less return outwards. Okay, so when you less that, you get your net purchases. That will be your actual purchases for the period. Once you have gotten the net purchases, what do? Then you now send it, you put it under the opening stock, and you add the two together to get cost of goods available for sales. So your purchases, your net purchases, plus the opening stock, or you add it to the opening stock, will give you cost of goods what? Available for sales. Then you less your closing stock, you get cost of goods sold. Now, when you have wages in the question, wage is a direct labor. So anytime we have wage, you add it here. But if it is wages and salaries, that should go to the profit and loss account. So you watch the question or how it is stated. If it is direct, you add it. If it is indirect, then you take it to the profit and loss account. Then when you add it, you get your cost of sales. This is the figure we have been looking for. Then this is the figure under your net sales. Then you compare the two. So as we know, once your sales is more than your purchases, you are making a profit. So we should know that. So if your net sales is more than the cost of sales, that is what? A gross what? Profit. We stated that over here, you determine a gross profit or a gross what? Loss. Okay, so objective, excess of net sales over cost of sales is known as what? That is what? Gross profit. So we should get to know some of the questions that will be asked. Then we will get a gross profit or gross loss. Then all other income in the question, you add it to the gross profit or the loss. So example, discount received, investment income, and other income. So now, we are now in the profit and loss account. So you add all the other income in the question. So mind you, when you are solving a question, especially involving a trial balance, all the incomes are the credit side. So you don't have to waste time at all. We just check the values. The items are the credit side and then pick them fast. Okay. Then when you add it, you get your total income for the period. Then you now compare this to all your expenses. So expenses, I hope we can mention a lot of that. Rent and rate, insurance, salaries, motor expenses, discount allowed, carriage outwards, bad debt, depreciation on non-current assets. Then when you assemble all these expenses, then you add all of them, you get your total expense, which will be exactly under the total income. Now you compare the income to the expense. So the total income and then the expense. So if your income is more than the expense, that is net profit. And if the expense is also more than your revenue or your income, that is net loss. Mind you, in accounting, you don't have to write negative. The net profit indicates it is positive. The net loss indicates it is minus. So you don't have to put negative there. It doesn't work like mathematics. So there shouldn't be. You don't write negative against any figure or plus against any figure. So the positive means it's a profit. Negative means it's a loss. Okay. Now we look at the statement of financial position. What is a statement of? It's a statement we prepare to tell the position of the business. So with this one, we talk of assets, capital, and liabilities. So when you are preparing the balance sheet or statement of financial position, anything that should go into this account should be these three things: assets, capital, and liabilities. So what we do? The first one, the fixed asset or the non-current assets, you list them. I've given two examples: land and building, furniture and fittings, plant and machinery, motor vehicle, and all that. So when they are in the question, you bring them. What are non-current assets in a way? All assets acquired for the business. The intention is not to sell them, but to be used in the business for more than one financial year. So building, plant and machinery, motor cars, and all that. So you see them in the question. Then you bring them. Then you sum them up, you send it to the last column. Then current assets. What are the current assets? All assets that are meant to be used within one financial year, normally to be converted into cash. So the first one is the stock. And the stock we are talking about here, we know we have opening stock and closing what stock. So, but the one in the balance sheet is closing stock, so we should get it. The one in the balance sheet or statement of financial position is a closing stock. Then you bring your debtors, bank, cash. We may talk about other ones when we are looking at adjustment, But for now, this is a simple one that we are looking at. Then you sum up all of them under the second column, then less current liabilities. So all financial obligations within one accounting year. That is what we are calling current what? Liability. So creditors, then expense creditors. So you add this to, we have more. When we are looking at adjustments, we'll bring more of that. So you add whatever you have, you add it. If it is one, you send it straight away and you less. So you get a total. You now compare it with the current assets. So you less the current liabilities from the current asset. The moment you do that, the result is known as working capital. So what is working capital? Is current assets minus current liabilities. Then you now add the result. The result, you bring it and then you go and add it to the non-current assets. You add it to your non-current assets. Then you move on. Then you get either the net assets or the total assets or capital employed. Then you go to finance bar. You bring your capital, you add the net profit. You know, when you establish a business and you are making a profit, what do? Your capital increases, so you add. If you are making a loss, your capital decreases, so you less. So you get these two things. If it is profit, you add. If it is a loss, you less. Then you less drawings. So what are drawings? Anything you take from the business. For personal use, you establish a business and you are taking something for personal use. You are not using it for the purpose of the business. If you do that, you are reducing the capital of the business. So anything taken, whether in kind or cash or whatever, goods, you add all of them and then you less it from the capital you invested into the business. Then when you do that, then you add your long-term liabilities. So example, loan. So financial obligations more than one financial year. So normally we talk of loan and debenture. So when they are in the question, you bring them here, you add all of them, you get your owner's equity or capital employed. So basically, these are the statements. Now, let's look at a question. We have a question here, erection, trading profit and loss account, and we have to prepare trading profit and loss account and a balance sheet. So we've been given a trial balance. So we have our capital, the drawing, purchases, and all that. So it's not difficult. Once you have known the format and you understand what to add, what to less, then the question will be very easy. So these are the questions that we have. Okay, so we have the total 57,600. We have the total of the trial. So now, once you are given the question, some of the markings are just bonus. So the name of the question should be the first thing. What's the name? So this one, Mr. Eric Xiao. So you write it and you underline. Then you go by the requirements. All these are on tick basis. So the heading, trading profit and loss account for the year ended. So the year you are given, then you write that. Please, these are things that you write without thinking of anything, because it's part of the requirement, which you will be given a mark for. So most times students solve questions, they don't get the full mark because of some of these small things they do. No heading, the name of the company or the person will not be there. So please, these are, even if you cannot answer the question, at least these ones you should bring them. But it's very easy. So looking at the question, we have sales in the question. So now this one depends on you. We also have 10 inwards, and we explain that You sold to people, they are bringing the goods back to you. So what do? We less. So you may put it in the second column or the last column. Or by advice that you should put it in the last column, then you less your return inwards. So assuming that you write it in the last column and there's no return inward, you just move on, so that you don't repeat the sales figure. So we less the return inwards, then we get our net sales for the period. Then less cost of sales. So we have opening stock in the question as we went through the format. Opening stock, you put it in the second column. That is 2,800. Then you check. Now, when you write add purchases, you write add purchases. You don't put the figure there. Go back to the question and check whether there are adjustments on the purchases. So, for instance, carriage inwards, return outwards, drawing of goods. These are some of the adjustments that should be done on purchases. So you do all these things. So once you have anything or any of this in the question, then you should put the purchases in there, or you write it in the first column. But assuming you don't have any of this, straight away, you put it under the opening stock and you add. Okay. So with this question, we have this thing. So our purchases is in the first, we add our carriage inwards, then we less our return outwards, then we get our net purchases. So please remember, it is only the net purchases that should be added to the opening stock. Okay. Then when you add that, the moment you add, you get cost of goods available for sales. This one should be costs. Cost of goods. Cost of goods available for sales. So the moment you add the net purchases to the opening stock, you get cost of goods available for sales. Then you less your closing stock. So once you less your closing stock, before you even less, check whether you have wage or any direct expense or direct labor to be added. So if example is a wage in the question. So with this one we have it, so you add it, you get your cost of sales. So you get your cost of sales. So now the cost of sales, we compare it to the net sales. Our net sales is 17,550. So, but our cost of sales is 9,550. So if you less, you get 8,000, which is your gross profit. And we stated that once your net sales is more than your cost of sales, you are making a profit. So now once you have gotten a gross profit, means you have ended your trading account. So from here, we move on with the profit and loss account. And we said that with this is where you introduce your income and then your expenses. So the income first. So you go through the question as we said, you get it at the credit side of the account. So discount received is an example. Investment income, rent received. So income in the question. I think you should be able to identify them. And again, I'm saying that all incomes are having a credit balance. So just go to the credit side of the trial balance, and then you can check them and bring them. So when there are two or more, you do them in the second column, you add, then you take it to the last column. But if it is only one, straight away to the last column, you add to get your total income. So that is what we have done over here. Then now, less operating expenses. So all expenses in the question. Now, the expenses, so you should know, accounting is all about opposite. If incomes are having a credit balance, then the expenses will be having what? A debit balance. So you go to the debit side of the trial balance. That is, if it is a trial balance, then you look out for check the values at the debit side, because the expenses will be placed at the debit side, the values. So carriage outwards, rent and rate, advert, motor expenses, and all that. You check that. Discount allowed, depreciation, lighting and heating. So you see some of these expenses in the question. The interest on loan, salaries, bad debts, and all that. So you sum all the expenses, then you send it to the last column, which is total operating. The name is total operating expense. So you now compare this expense to your total income. Then you can tell whether you are making a profit or you are making what? A loss. So if your income, again, if your income is more than your expense, you are making a profit. And if your expense is also more, you are making a loss. So either a net profit or a net loss. But in this case, our total income is more than our total expense. So we are making a net profit of 1,640. So preparation of this statement is very simple. Once it's understood, you are okay. This one, when you are preparing these accounts, you don't have to be looking at the format. If you do that, 1,000 years, you will never get it. So what you have to do is that maybe go through the question, then solve, make all the necessary mistakes, go back and check. Once you do it 2 or thrice, you will get used to. So there's no need for you write sales and you go and check what should come. No. If you continue that way, then it means you will not get the format. And what is also necessary here is that know what to be added, what to be subtracted. Why are you adding this? Why are you subtracting this? So once those things are understood, then you are good to go. I hope this is not difficult. You can see these are normal things we do. So expenses, you compare your expense to your income or your revenue, and you check whether you are making a profit or loss. Everyday activities. So we just put them on paper, that's all. So they are not difficult. You follow it. You practice. Accounting is all about practice. You practice, that's all. Okay, then we look at our statement. What we are saying is that the balance sheet or statement of financial position, all you look out for is the assets, capital, and liabilities. These are the things, these 3 things. So if the thing is no assets, capital, liabilities, it can be found in the balance sheet. So you take note. So you bring the non-current asset or the fixed assets. You bring them investments. Investment is an intangible asset, but normally it's between the current and non-current, but normally we just add it to the non-current. So you add the two. What we have 2 of them in the question, then you now move on with your current assets. So the current assets, the stock. Normally, for the current asset, we list them in order of liquidity. So the stock should always be the first. Stock. Then if you have debtors, bank, cash, we list them. So the first thing in the business should be cash. If you don't have cash, what do? You go to the bank and see whether you get, you withdraw money. If you don't have, you fall on your debtors to see whether you get any money. If you don't have that, then the next thing is to sell your stock. So normally, for current assets, it's good you list them in this order. So we list them in order of what? Liquidity. Okay, so you add all your current assets, then you less your current, you compare it with your current what? Liability. So over here, with this question, we only have current creditors. We have creditors, then we less it, we get working capital. So what we are saying is that you are comparing the current liabilities to current assets. The difference is known as working capital. So what is working capital? Objective. So excess of current asset over current liabilities is known as what? So once you have gone through the topic, any objective question, you should pick them or get them at ease. Then you now add the working capital to the non-current asset to get your capital employed or total net assets, whichever name you prefer to name. Okay, so then you move on to the last aspect of it. So the last aspect, that is financed by or represented by, you bring your capital. So capital. In the question you see it. And again, we learned the accounting equation. The previous lesson, we learned accounting equation. So that is why you need to follow all these lessons. You need to observe all the lessons. You need to follow them. So we said asset equals capital plus liability. Assets are having a debit balance. So capital and liabilities are also having a credit balance. So when you are looking for capital, the value is always at the credit side of the trial balance. So that is, I entreat you seriously to follow the lesson on joy learning. In fact, it will help you a lot. Just listen, and follow these lessons. Okay. So you bring, as we said, you bring your capital, then add net profit, as we said. So if you are making a profit or if you have made a profit, so this figure is picked. That is the last figure on the profit and loss account. Yes, that is 1,640. So whatever you have gotten here, whether net profit or net loss, is what we're going to send to the balance sheet. Okay, so if it is profit, you add. If it is loss, you less. Then you go through the question, see whether there are drawings. So once you have drawings, you less. Then if you have long-term liabilities, so long-term liabilities, then you add it. Then you get your owner's what? Equity. So I believe the preparation of this account is not difficult. The only thing is that you sit down, plan yourself, go through the format, understand why you are adding, why you are subtracting. That's what matters. And again, I advise that you should not write one thing and refer to the format. So basically, the financial statement, the income statement, and the balance sheet. Examples of financial statement. So these are the format, and this is how they are supposed to be what? Prepared. So today, basically, what did we look at? We define financial statements, we look at the components, and then we talk about statement of financial position, income statement, then a sole proprietorship, because this account we are preparing it for a one-man business. That is so common, we say. So somebody who establishes his or her business and run the same business himself or herself. So we explain that. And then we had a look at examples of a sole proprietorship with diagrams. And then we now come to our income statement, where we talk of sales, and we said it's made up of two accounts, a trading account and profit and loss account. And what we said, in the trading, sales and purchases. And if your sales is more than your purchases, you are making a profit. If your purchases is more than your sales, you are making a loss. So either a gross profit or a gross loss will be declared here, or will be determined here. Then when you go to the profit and loss account, you talk of revenue and expense. Only these two, revenue and expense. So if your revenue is more than your expense, net profit. If your expense is more than your revenue, net loss. So the combination, this one, as I said, the question will ask you to prepare trading profit and loss account, so which means it will just continue like that. So that is the income statement. Then we had a look at the format. The understanding of the format is very, very necessary. Very, very necessary. We explain the sales. Why do we less return inwards? We want to know the actual sales. We want to know the actual sales for the period. I sold, or the business sold. One reason or the other, the customers are bringing the goods back. So how much thing have we sold to the customer? So in order to know the actual sales for the period, you less whatever they have brought from what you have sold to them. So that will give you the actual sales for the period, which is known as the net sales. Then cost of sales, all the expenses you have made to enable you do this selling. That is, then you compare that. So opening stock, if you have your purchases, you add, you less your return inwards. So the return inwards, add purchases. Then if you have carriage inwards, you add. So the amount you spent on bringing the goods to the business. So how much? So if it is, sometimes you can use even plane to carry the item. So you see freight in the question. So if you see that, it's the same as the carriage inwards. So you add it. Then you less your return outwards. You get your net purchase, cost of goods available for sales. Then you less your closing stock, get cost of goods sold. So once you have wage in the question or any other direct expense or labor to be added, then you should have cost of goods sold. But if you don't have the wage or those things I mentioned in the question, then straight away you get your cost of sales. So what I'm saying here is this. This is a format. So it's not everything in this format that will be in one question. But the issue is this. You are learning because if they are there, how will you apply them? That is the issue here. If these things are in the question, how will you apply them? So don't be scared that the format is long. No, you cannot get all these things in one question. Okay. So you add your wage, then you get your cost of sales, then you compare it to either determine the gross profit or the gross loss. Then now you are in the profit and loss account, which is the revenue and expense that you are bringing. So you bring all the revenue first. Discount received, investment income, rent received, commission received. You see them in the question. You bring all of them, you add them. You come and add it to get your total income for the period. Then less operating expenses. So all the expenses in the question, you bring them. Then you get your total expense, you compare to get your net profit. So basically, this is the format that we went through. Then the balance sheet or statement of financial position. So we prepare this account to give the position of the business, our assets, capital, liabilities of the business. What is the position of the business? Okay, so the first thing, you bring your fixed assets. You go through the question, you get your fixed asset. We explain what it is, what it means. All assets acquired to be used in the business for more than one financial year. The intention here is not to sell. Land and building, plant and machinery, cars, furniture and fittings, and all that. So you see them in the question. Then you total it, you send it to the last column, your current assets, stock, debtors, bank, and cash. And I explained that these things should be, for the current assets, Even the non-current asset, we are supposed to list them. We list them according to most fixed, but that one doesn't matter. But the current asset, the current what asset, must be listed in order of what liquidity. In order of liquidity, always necessary. Stock being first, debtors, bank, and cash. So again, these are not the only current assets when we are going to. So that is why I entreated that you should follow the lesson, and all the lessons you have to follow it and observe them. The next one will be adding more to this one. That is when we are taking adjustments of the final account. We'll be adding more to this. So I entreat you to be part of joint learning actively. So basically, these are the things that this is how the statement is prepared. Now, so I believe with this, you should, when a question is given to you, you should be able to solve. Now, and with this lesson, I entreat you to go and answer this question. What is a sole proprietorship? Define financial statement. What are the components of a financial statement? And then you state and explain the format that we learned. That is the income statement and statement of financial position. And I also urge you to go to, you refer to Accounting for SHS written by Eric Odro, page 128. There is a question there. I want you to solve it and balance that question for me. That question. So kindly go to that page and solve that question for me. Okay, references. So GES Financial Accounting Syllabus, Financial Accounting written by Eric Odro, International Financial Reporting Standards, and WAEC past questions. So there are other sources that you can get some of this information. I hope you have heard this lesson. And I entreat you, the next lesson, this is just the beginning of it. There are more to come, because WASI, a question will not be set like this for you. It's very simple. So there will be talking about adjustment. There are certain things we should be added to this. So I entreat you to be part and follow the next lesson. Thank you.
Subscribe to our YouTube channel, Joy Learning TV.